everyone, and welcome back to the series on making money with saltwater fish trading. Today, we are discussing the process of analyzing the hunting ability of saltwater fish. Remember, this is a process, meaning it will have steps. Step 1, Step 2, Step 3, and logical sequences so you can confidently execute these steps without blindly guessing, which is very dangerous. As you know, in trading, most participants in the market want to trade alongside the big players. They often ask when and where to enter the market to follow the big players, because if they enter at normal times, they might be caught in sideways movements during market noise, preventing them from making profits. Secondly, if prices move, they will move with increased costs, and knowing when to buy and sell appropriately is crucial to avoid large losses. Moreover, if prices move, where will be the reasonable price zones to follow the big players? Because if we hold on too long, prices might reverse, and we could lose profits. We need to know where the reasonable exit points are, as there are no permanent exit points. As you know, prices don't always increase continuously. They rise and fall. If we keep holding, we might lose. So today, we will use the technique of analyzing the hunting ability of big players to answer 3 questions you need to know when the big players go hunting. The first step for them is to have a target, right? When you go fishing, the first step is to find a spot with fish. You can't fish in a well, just like big players can't hunt in a patternless market. Big players mean to find a market that meets basic criteria, possibly more. But here we'll discuss 3 criteria. 1, there is a trend. 2, there are support and resistance zones. 3, there are probing patterns. Why are these 3 things necessary? A trend indicates a crowd, and the crowd says the trend is your friend, and they only trade when the market. A classic saying in the Forex market is no trends, no trials. This means that if there is no trend, they will not trade. So if there is a trend, the crowd will enter to trade. This will create people who are setting up walls in this game, and the sides can completely shift based on their mistakes. Secondly, there are resistance zones. Why must there be resistance zones? For example, we need to have peak positions, like the double top pattern or the double bottom pattern. Why must there be these resistance zones? We can call the resistance positions as resistance levels or support zones or price channel areas, trendline areas. But basically, we just generally call them resistance because at these resistance zones, we will have entry points. Consolidation will have entry points with low risk and high reward. Is it true that when trading at the peak, you will stop loss slightly at this point, and it will be easier for you to know where most of your next consolidation zone will be when searching for resistance zones? For example, if the price drops, we will consider the support zones, the trendline areas. That's how most people will enter the market. And the reason they look for those resistance zones is to have a short stop loss that can counteract mistakes. And they know there is a clear entry point. And the third reason is that there are candlestick patterns. Why hold onto those candlestick patterns? Because candlestick patterns provide strong signals, and when these strong signals occur, indicators will give traders a buy signal, prompting them to enter the market. So when we know that a market is dynamic, it is a market with 3 basic criteria of having a trend: resistance levels, and there are strong candlestick patterns that must be within this joyful pair. Then we have the major conditions that I have just shared with you. After we see the market, we notice that people are excited. So when they are excited, you might ask how they will proceed. We will talk about the strategies in trading. There are 3 methods. The first method is that they will hold onto the stock. The second method is that they will sell, and the third method is that they will hold their position. Let's think about it in a simple way, and then find a way to explain it to you clearly. Regarding the question of why you have 3 options, and not 2 or 5, we will answer based on simple logic like this. If the crowd is very large in the market, then you simply need to set up a price model. Set up a price model, a price model. We have to prepare a model in advance and let the crowd start exploiting that model. And to exploit the model, there must be attractive pieces, right? Similarly, when you look at this model, let me show you the first example where we will set up a model. What is setting up a model? We let the crowd enter, again at the bottom. When the crowd catches the double bottom pattern, it moves into an uptrend and there is a reversal compression here. The reversal compression is where they buy at the bottom, and soon it reaches the top. This is how we bring the crowd in with enticing pieces. The crowd will naturally enter, and in this case, the crowd will soon succeed. So this setup is not the one that the insiders are considering, not what they are choosing. There are three options for the insiders, and in this case, they do not choose to use the setup. But if the setup occurs, what will impact the market? Let's see when the crowd enters and the price drops. It's as if the crowd steps on a trap and they lose money. This also means that if the price goes up, the market drops equally. In this case, those who have been placing orders, in the case of the euro to US dollar pair, we see that there is no price range, no pattern to follow. If you don't use orders, what situation will you use next? We have the opportunity to sell. Or if we place orders, we also place sell orders. It is crucial to have tools, and you don't need to reduce this color. You don't need to reduce it. Just focus on the area with potential. Simply put, when it reaches that point, we will trade and create a signal. So what is selling? It's during extremely sensitive market times, like when news is released or when the market opens, that there will be those rounds that sweep up and down very extensively with extremely large ranges. Here, selling, your way of selling is like that. They will rely on those sensitive moments to use as a reason and make the price move in two directions, considering traders who are caught or stuck and they don't know whether the price will go up or down because it moves in two directions, sweeping up and down multiple times. This happens very frequently, and analyzing it, you probably have encountered it more than once. If you have encountered it, comment, "I have encountered the pancake fish scenario." Comment, "I have been caught by the pancake fish," if you have faced this situation. And the 10th way is the method of farming, and why the fish are farmed. Let's discuss it as follows. Through a simple example, you go hunting, you go to the field during favorable times, when there are many fish, but on the contrary, think about going during the winter, when the fish are hiding, or sleeping, or burrowing into holes. How can you keep setting traps, or shoot them because they have gone to sleep and burrowed into holes? The best way in this case to ensure you have food is to farm them. And if you are farming, you need to have a process. The first step in the process is that you need to have a pen. What is a pen? A pen is a place to keep the animal or the animal you are raising, moves around the pen and never leaves it. Imagine you are raising a cow, and if the cow escapes the pen, it's as if you've lost the cow. You can imagine that when you are raising it, you have to keep it in an area that you can control. Here, it looks like a pen. When we look at the double top and double bottom pattern, it resembles a pen, and the market attaches itself to the outside of this pen. Then we look into the pattern and ask, if we have the pen, then we must have the cow, right? The cow, of course, represents the sellers at the top and the buyers at the bottom. When you have a cow, your job is not to sell it immediately because it's still too small and not fully grown. You have to raise it. So what do you do to raise it? You have to choose how to feed it. How will you feed it? Will you bring the grass and throw it at its feet? Or will you take it outside? Or will you bring it directly to the cow's mouth? Naturally, when you are raising a cow, you will bring the food directly to its mouth. We will cut the grass and put it into a machine to feed it. When it comes to feeding, some people gather grass, some provide water, some fatten them up, and some bathe them. This is part of the process of raising them. There are times when I find it extremely easy, and that's when we are in the business of raising something. Raising here means managing sellers. Sellers should not stop buying because whether you sell or buy, you are essentially part of the crowd, right? In a crowd, there are sellers and buyers, just like in a herd of cattle. In a herd, you need to have a bull and a cow because when you have a bull and a cow, they will produce offspring, right? Suppose if a herd only consists of bulls, then they cannot reproduce. They cannot reproduce. There will be no calves. Similarly, we must understand that in the Forex market, where there is a crowd, there must be sellers and buyers. And both these sellers and buyers need to make money. When they make money, they will attract people. These calves are the people being attracted. Do you understand this? The people being attracted. Once we understand this mindset, we become enlightened and realize that this market is not what we previously thought it was. This market is one with formulas and processes for nurturing. So sometimes you wonder why in certain markets. For example, when I buy at the bottom or sell at the top, I make money, and both buyers and sellers make money. In this case, buying is not foolish. It's simply being nurtured. When it's being nurtured, you sell at the peak. Remember, when you sell at the peak, you are against the bottom, and if you resist, you are in the support zones, which are very good and profitable. You can make a lot of money buying like that, and when it peaks, it continues to rise. So when the sharks nurture us, do they have meat or not? In society, do you raise cows for entertainment or for meat? Do you raise chickens for entertainment or for meat? Of course, we raise chickens and cows for meat because if we don't, we won't survive. If we don't slaughter them, what will we eat? So we have to slaughter them to survive. Initially, we accept to nurture them, feed them, so we incur costs, right? At what stage do you incur costs when raising cows or chickens? You incur costs in terms of effort, money, right? You have to buy feed for them, bathe them, and take care of them, which costs a lot of effort, money, and time. But in return, later we will slaughter them. How will we slaughter them? This question is certain, and this area will be locked later. Trust that it will be locked later, and in the market, there have been many protections like this. If you want to know more about this, comment that you want to hear more about proving this, and I will send you more videos. If you want to hear a video about how sharks nurture and place traps, comment that you want to see a video on the nurturing process and trap setting by sharks, and I will send you another video. Some videos are already available, and I will continue to talk about this. If it has been nurturing this area, and we have determined that it is nurturing without setting traps or shooting, you can see that because the movement is stable and it doesn't sweep. This is the stage where you can clearly see the nurturing for the purpose of attracting new participants. Do you understand this stage yet? Do you understand yet? Why do buyers and sellers make money over a period of time? Just like why both bulls and cows are fed. Because the purpose is that over a period of time when both the bull and the cow are being raised, they will produce a calf. If there were only bulls, there would be no calves. Similarly, the market must have both buyers and sellers, and both can make money. This creates new players, forming a larger crowd, which is the goal. When the crowd grows larger, the sharks start to go green. The question is, if the sharks go green, how do I know? How do I know which way the price will move? At this point, we still follow the process, and the third step is the possibility of sharks going green. When sharks go green, it's like when you go to slaughter. This part is a bit gruesome, but when we do it, we have to take the cow out of the temple. Why does it do this? Because we have to take it out of its comfort zone. Taking it out of the comfort zone means it will enter the risk zone, right? Out of the comfort zone, you enter the risk zone. It must reach the risk zone for the bull to make a mistake and win naturally. It's self-replication, right? Losing the ability to replicate, so it hurts the cage, and it hurts again without a region, then it can replicate this region. It's this region, so he will know that if it locks these two positions, then of course we will know that the skin belt is neat, the wrapping is affected. So now we will come to the capabilities and the price of the amount we cannot trade. We will propose the possibility for the price to decrease. It's increasing more than ever. So, which conclusion should we draw? And the basic for a straight line movement of the price is that it moves in a straight line in the scenario where it decreases or increases. We consider one of the two scenarios. If the price increases straight up, then at this point, I know that the sellers, those sellers, if there are sellers participating, the price will definitely go back. And especially if it goes straight up, it will take a corresponding segment as follows. If the price has decreased from here to here by a segment X, then it will take a segment X. Got it? Now, the second basic scenario is assuming the price does not follow a straight line. It touches here, decreases, and then we continue to increase again. Here, we have a zigzag pattern. So the statement is that the price will take a segment as follows. Decrease to here by X, then it takes to here by X. Then, in the following case, it goes up here, down here, and then out again, or like this, maybe more. In the case where the calculation is not possible, we only calculate within simple pattern segments. If it becomes too complex, then we need to look at additional data to arrive at an accurate result. This formula is simple. If color plus color, then it just balances. If color sees color plus color turns color, then it will be approximately equal to 2. Approximately equal to 2, okay? Approximately equal to 2. But suppose it's 1 by 0.56, 2056, plus 1, x, 108. Then sometimes the result is cold. Cold, meaning it won't be equal to 2 anymore. It's not equal to 2. And you need to understand that in cases where the model becomes complex, we need to have more data to calculate it more thoroughly. So we have two scenarios. The first scenario is a straight price, and the second scenario is the price going up and down. We see where the hunting zone is. At that point, the sharks will bring their bait out of the safe zone, or you will use hunting models with the sharks, and you will know that the crowd being nurtured in this area has a clear grazing zone. The crowd being nurtured at multiple prices is moving very steadily in this area, making it leave this position, or the current position will no longer be stable. And you know that when you buy the cow, you have to pamper it a lot. You have to give it time, right? You have to give it time properly. But when we slaughter it, whenever we are hungry, we eat it. Slaughtering it depends on two factors. First, it has grown. What does it mean to grow? It means it has to attract people to trade. Look at this. The seller makes money, the buyer makes money. Now, the market starts to create sellers. You know there are sellers here. There are sellers of machines. So the house has, music it has, attracted people to trade. There are sellers of this blood. Imagine this is a breeding cow, person A, and this is a breeding cow, person B. Now it has offspring. The calf here is the person trading, the person exchanging. If there are more people, it means creating calves. Then we will know that this stage's purpose is to create buyers. The sellers of machines will then be slaughtered. And remember that when it is already this for sure, there is meat, and however much it gives you to eat, it will take back entirely. it will definitely say that it takes back everything. This is a basic principle. For example, if you put out a resource of 10 million VND to raise a cow, then surely when you sell it, you have to sell it for more than 10 million VND. This is a very obvious principle, and everyone always agrees with this logic. So this logic is not just a way we reason, but it is a reasoning that is well-founded and scientific, but we will need verification. In this video, Zan cannot yet share with you the trading part to verify whether the price is still fluctuating as you want to verify with Zan or not. Zan has something to share with you. If any of you are learning Zan's methods, please register or become a member. You will receive a lot of shared content and extremely detailed information. This content is used in a certain way, and you will receive it through registration and membership only. Membership levels range from 0 VND to several tens of thousands of VND. You can register and receive benefits, and there are free membership levels you can register for to receive. Here, Zan is just suggesting to you, and previously, Zan told you this. If we want to make money, the first thing in the money-making game is to understand the rules. If you don't understand the rules and can't solve the constants in the market, there are 3 types of constants. One is constants, which are things that don't change the principles that the market always operates on. They create repeating patterns in the market, like why waves go up and down repeatedly, why cup and handle patterns, head and shoulders patterns repeat. It's because they rely on unchanging constants. Next are variables. Variables are things that will change over time, according to cycles and market factors such as news and political issues. These are the variables that often cause us to lose money. For example, recently, with economic conflicts and military issues, including military threats, they have caused prices to rise very strongly. There are days when prices increase by 100 points, some days by 120 points, increasing significantly, sometimes 5 to 10 times the normal rate. Why is that? It's due to the variables. The third type of constant. The third constant is something we didn't understand before. We didn't perceive it. But just because we don't understand it doesn't mean it doesn't exist. For example, you like to breathe oxygen, but do you know what oxygen looks like? Can we see it with the naked eye? We can't see it, but that doesn't mean it doesn't exist, right? So if we want to see it, we have to use tools to analyze it. Then you can see it. Otherwise, you can't. Or take sunlight. For example, it has 7 colors of the rainbow, but can you normally see them? We only see a single, very white light shining down. But when we refract it through a prism, we see it split into 7 different colors. That's what digital images are. Digital images mean they cannot be seen or understood through conventional logic, but must be accessed through a medium. For example, through a medium or a tool or a system, we can then see it. Otherwise, without a medium or tool, who would know? By everyone. That's why I simply want to point out to you that this market page has a way to operate and a way for you to understand its operation. But we must not forget, and we must start by understanding it thoroughly. So today's video will end here, and we will have many more videos in the daily series Hunting with Sharks. Sully hopes to see you again in the practical sessions. Goodbye and see you next time. If you find Sully's shares interesting and useful, please support Sully by liking and subscribing to the YouTube channel. Click the bell icon next to it so that whenever new videos are released, you will be the first to receive notifications. Thank you and see you in the next videos.